Okay, let's dive in. Picture this. You're navigating a global economy where trade rules are just, well, shifting constantly. Almost daily, it feels like.
It's definitely a dynamic time.
And that's exactly the reality for businesses, for nations caught up in this really groundbreaking new U.S.-Vietnam trade agreement. It was announced recently, late June 2025.
Mm-hmm.
And look, this isn't just some standard bilateral deal. We're talking about a pretty profound strategic move, something that's going to ripple through supply chains, redefine key relationships.
Absolutely. Big implications.
So our deep dive today, it's all about unpacking this for you. We'll get into the core terms, we'll look at let's call it the Chinese factor, which is undeniable here, and explore that really intricate, sometimes tense triangle between the U.S., China, and Vietnam.
That triangle is key.
And here's where it gets really interesting, I think. We're going to look hard at the challenges of actually enforcing a deal like this. How do you police global supply chains?
Yeah, that's the billion-dollar question, isn't it?
Exactly. And then finally, we'll touch on whether this whole agreement could be, a kind of template for future U.S. trade deals in Southeast Asia.
A potential blueprint.
Right. And just so you know, we've pulled from a lot of different places for this economic analyses, from places like A-Invest, Bloomberg, but also academic papers, looking at trade friction, trying to give you the full picture.
It's a complex issue, needs that wide lens. Crucial moment in global trade really shows those bigger geopolitical games playing out economically.
Okay, so let's start at the top. This deal came about under the Trump administration's reciprocal tariffs policy. Can you break that down a bit? What does that policy actually mean in practice here?
Sure. So reciprocal tariffs, the basic idea is, look, if a country has a really big trade surplus with the U.S., they should expect tariffs unless they make changes, like opening up their own markets more to balance things out.
Okay, makes sense.
So in this specific case with Vietnam, the agreement sets out two main tariff rates. First, Vietnam agreed to cut its tariffs on American goods way down, essentially to zero.
All the way to zero. Wow.
All the way. But in return, the U.S. puts a 20% tariff, a levy, on direct imports coming from Vietnam.
Okay, 20%.
But the real headline grabber, the strategic core, like you said, is this much steeper 40% tariff, and that's specifically on what they're calling transshipped goods.
Right, transshipped. We'll
Yeah.
definitely need to unpack that. Now, I heard Vietnam was initially facing a much higher threat, tariff-wise.
That's right.
So 20%. It sounds high for an export economy, but maybe it was the better option, a strategic calculation.
Oh, absolutely. The initial threat was reportedly around 46%. That was floated because Vietnam, back in 2024, had the third largest trade surplus with the U.S. globally. Huge number.
Third largest, okay.
So yeah, 20% is definitely better than 46%. But let's be clear, it's still seen as a really high cost for an economy like Vietnam's that depends so much on exports.
How high cost are we talking?
Well, some analysts are projecting this could potentially cause like a 25% drop in Vietnam's exports to the U.S.
25%, that's massive.
It is, and that could knock maybe over 2 percentage points off their GDP growth. You're talking impacts on major sectors, apparel, footwear, electronics. It's significant.
That is a serious economic hit. So what else did Vietnam agree to, besides accepting these tariffs, to get the deal done?
Well, beyond the tariffs, Vietnam made this pretty big commitment to completely opening its trade market to American goods.
Completely open.
That's the language used. And we're already seeing practical examples, like U.S.-made SUVs. They're now set to enter Vietnam totally tariff-free.
Interesting. So it's not just a small concession.
No, not at all. It's a really clear signal. It shows Vietnam is strategically willing to compromise here, accepting what, frankly, looks like a highly asymmetric deal on the surface.
Why do that?
Well, the thinking is likely about maintaining those crucial trade flows, sure, but maybe even more importantly, it's about strengthening their geopolitical ties with the U.S. It feels like a long-term strategic play.
Okay, which brings us right back to what everyone's talking about. The Chinese factor. That 40% transshipment tariff. It just screams China, doesn't it?
It's the elephant in the room, no question. That specific clause, the 40% on transshipped goods, it's widely seen, almost universally interpreted as a direct, very deliberate move to, quote, precisely strike Chinese goods.
Strike them how?
By targeting products that manufacturers have been, rerouting through Vietnam specifically to get around the existing U.S. tariffs on China itself.
Ah, the loophole.
Exactly. So this 40% tariff, it's basically a sword pointed at China, as some have put it. And Beijing has noticed, of
So how
course.
are they reacting?
Their Ministry of Commerce says they're closely monitoring, and they've publicly warned they might take resolute countermeasures if they feel the deal harms Chinese interests. They definitely see these transshipment clauses as provocative, a direct challenge.
This really gets into that complex triangle, especially with the whole China plus one strategy we've seen develop. Can you remind us what that is and how it sort of set the stage here?
Sure. So China plus one was basically a reaction by global companies to the first round of U.S. tariffs on China a few years back.
Right.
Many manufacturers, big names like Nike, Gap, Lululemon, started moving parts of their production out of China and into other places, especially Southeast Asia. And Vietnam was a really popular choice.
Why?
Simple objective, really. Avoid those U.S. tariffs on goods made in China and also diversify their supply chains, spread the risk a bit.
Okay.
But this strategy, while good for Vietnam's economy in many ways, led to this massive surge in their exports to the U.S.
Which then put them on the radar.
Exactly. Their growing trade surplus caught the eye of the Trump administration, making Vietnam, kind of ironically, a target for these reciprocal tariff threats.
So they benefit from companies leaving China, but that very success makes them a target for U.S. tariffs because their surplus grows too big. Classic unintended consequences.
Precisely that. Their economic boom, partly fueled by companies shifting production, put them right in the crosshairs of a U.S. policy aimed at fixing trade imbalances. So even though they gained from China plus one, they then had to deal with this very strong economic pressure from the U.S.
It's fascinating, especially when you layer in the actual trade relationship between China and Vietnam themselves. It's complex, right? China's become a huge partner for Vietnam, despite history and tensions.
That's such a critical piece of this puzzle. Vietnam's growth as an export market for China has been, well, frankly, extraordinary.
How so?
Get this. Vietnam went from being China's 21st biggest export destination back in 2007 to briefly hitting number 3 in 2020.
Wow, 21st to 3rd.
Yeah, and this growth even picked up speed in 2019, right when China's overall global exports were actually slowing down.
So what's driving that?
It's led to this idea some economists call the new triangular trade. Basically, China acts more and more as the main supplier of intermediate goods. So think parts, components, materials, machinery.
Okay, the stuff needed to make things.
Exactly. Then countries in ASEAN like Vietnam become these crucial assembly hubs. They put it all together. And those finished products then go out to global markets, including the U.S. and even back to China sometimes.
So China makes the parts, Vietnam builds the final product. That really clarifies Vietnam's manufacturing boom.
Precisely. And there's data to back this up, showing the impact of the U.S.-China friction. A 2019 analysis broke down exports. It found that around 12.67%, almost 13% of China's total exports to Vietnam were directly linked to the U.S.-China trade issues. Meaning that chunk was either stuff being directly rerouted or it was production being moved faster to Vietnam specifically to dodge U.S. tariffs on China.
13% is a lot.
It is, and if you connect that to the bigger picture, it suggests the competitive side of the China-Vietnam trade relationship, which is fueled by this U.S.-China friction, is actually starting to become more significant than the traditional complementary side. It's a fundamental shift.
And the type of goods shows this too.
Definitely. Look at the numbers. Something like 73.4% of China's exports to Vietnam are these intermediate goods. That's way different from China's exports to, say, the U.S. or the EU, where you see a lot more finished consumer goods and capital goods. It just hammers home Vietnam's role as this assembly hub, still very reliant on China for the parts and machines it needs.
Okay, this all leads us to the massive question, enforcement.
Mm-hmm.
A 40% tariff on transshipped goods sounds powerful. But policing global supply chains, it feels like the real weak spot, the Achilles heel maybe.
You've absolutely hit on the critical weakness here. Think about it. Vietnam's ports handle a staggering amount of goods heading to the U.S. Estimates are around $137 billion annually.
Huge volume.
Massive. And within that, estimates suggest maybe 30%, even 40% of that value could potentially originate in China. But the actual rigorous tracking of origin of goods documentation, that's still described as an unresolved detail.
Unresolved. So how do you enforce it then?
That's the problem. The ambiguity makes real tough enforcement incredibly difficult. Companies are, naturally always looking for ways to manage costs and navigate these kinds of rules.
It sounds less like a clear customs check and more like that game, whack-a-mole, where companies find ways around rules and regulators try to catch up.
That's exactly the analogy some experts are using. Brian Wong, a professor over at Hong Kong University, he basically said Chinese officials know the U.S. will struggle to enforce this effectively.
Why?
Just the sheer complexity of global trade, he argues, and how creative companies can be in, quote, evading rules. He even suggested Beijing's strong rhetoric, the angry warnings, might be partly performance art.
Performance art.
And
Because they know it's hard to actually police.
that seems to be his suggestion, because they understand the practical, on-the-ground difficulties. Think about all the ways goods can be altered or relabeled, minor processing in Vietnam, changing labels mid-shipment, setting up shell companies. It's a constant cat-and-mouse game.
So even for companies trying to follow the rules, there's still confusion. I saw Adam Sitkoff from the Hanoi AmCham raise this.
Exactly right. Sikoff pointed out that many key details just aren't clear yet for businesses. Like, how exactly does the 20% tariff apply if a product has parts from multiple countries? And does that 40% transshipment tariff kick in for any product that contains any content from another country, specifically China?
Big questions. What does real enforcement look like then?
That's the critical unknown. Vietnam has pledged, stricter customs checks. That's a step. But the real challenge, the huge one, is auditing these incredibly vast, often very opaque global supply chains. How do you reliably track the true origin of every single nut, bolt, and microchip that goes into a product assembled across multiple countries? It's extremely difficult, maybe even impossible in some cases.
Okay, so given all these hurdles, all this complexity,
Yeah.
does this U.S.-Vietnam deal end up being some kind of precedent, a model for future U.S. trade deals, especially in that region?
A lot of analysts definitely see it that way. This deal's important because it's the first really complete agreement with an Asian nation under this specific reciprocal tariffs policy framework.
The first one fully done.
Right. So because of that, it's being widely looked at as a potential template for other countries the U.S. is negotiating with right now. Think Japan, Taiwan, India, South Korea.
And what's the lesson they're supposed to take from this template?
The main takeaway, according to analysts, seems pretty clear. If you want to deal with the U.S. under this framework, you'll likely be required to limit some trade with China.
Limit trade with China. Oof. Beijing won't like that.
No doubt. Beijing is almost certain to view any such requirements as provocative, interfering in relationships.
That's a strong message to send across Asia. How's a place like Taiwan reacting?
Now,
They're in talks too, right?
yes, Taiwan's situation is interesting. They initially faced a pretty high potential reciprocal tariff too, around 32%. So they are definitely watching the Vietnam deal very, very closely.
And what are they seeing?
Well, they've surely noted Vietnam's willingness to accept what observers called that highly asymmetric deal, giving up a lot, seemingly for long-term strategic value.
But will Taiwan have to accept the same terms?
Experts think probably not the exact same, especially not that 20% rate Vietnam got. There are key differences.
Like what?
Well, Taiwan's trade surplus with the U.S. is largely driven by different things, high-tech goods, think advanced semiconductors, AI-related stuff. It's not primarily seen as stemming from taking over manufacturing that fled China to avoid tariffs, which was a big part of Vietnam's story.
Ah, okay. So the source of the surplus matters.
It seems to, yeah. But the bigger picture here is just fascinating. You see the U.S. trying to actively reshape global supply chains, but the incredible complexity of trade, these tangled relationships, plus the sheer difficulty of enforcement, it makes it a monumental ongoing effort. There are definitely more chapters to come in this story.
This deep dive really highlights that dual nature, doesn't it? The U.S.-Vietnam deal is partly about tariffs, yes, but it's also very clearly a strategic chess move aimed at influencing China.
Absolutely. Both things are true at once.
And it just throws into sharp relief how incredibly hard it is to actually police the movement of goods in our interconnected world, pinpointing true origin, enforcing these specific rules. It's a massive challenge.
Indeed. And, understanding these really intricate relationships, it goes beyond just the trade statistics. It's about seeing the huge geopolitical forces at play, how they shape everything from where factories are located to, ultimately, the price and origin of the stuff you buy every day. Being truly informed in today's world means looking past the headlines, looking under the surface at these powerful currents shaping global trade.